Good morning and welcome to the Morning Minute. In today's episode, I am sharing something that I've seen come across my YouTube feed, email box, Google, all of the things. And that is the new Speaker of the House, Kevin McCarthy, a Republican from California, agreed as part of a deal with conservatives in the Freedom Caucus to win the speakership to allow a vote on a bill that would abolish the Internal Revenue Service and institute a fair tax that would replace federal income taxes and other taxes with a national consumption tax administered by the states. Recently, House Republicans passed a bill to strip the IRS of most of the extra $80 billion in funding for enforcement enacted last year by Democrats' Inflation Reduction Act. Although the bill is not expected to advance in the Senate, which is still controlled by Democrats. Now, if you remember, the Inflation Reduction Act of 2022 has a goal to make a historic down payment on deficit reduction to fight inflation, invest in domestic energy production and manufacturing, and reduce carbon emissions by roughly 40% by 2030. The bill is also intended to finally allow Medicare to negotiate for prescription drug prices and extend the Affordable Care Act program for 3 years through 2025. Representative Earl L. Carter, a Republican for Georgia, introduced H.R. 25, the Fair Tax Act, to replace the current tax code with a national consumption tax known as the Fair Tax. Co-sponsoring this Georgia-made legislation was my first act as a member of Congress and is, fittingly, the first bill I am introducing in the 118th Congress, Carter said in an on-record statement. He goes on, instead of adding 87,000 new agents to weaponize the IRS against small business owners and middle America, this bill will eliminate the need for the department entirely by simplifying the tax code with provisions that work for the American people and encourage growth and innovation. Specifically, the bill gets rid of the national personal and corporate income taxes and abolishes the IRS, which is slated to hire 87,000 new agents unless congressional Republicans can stop it, as well as implements a national sales tax, or the consumption tax. Additionally, the bill gets rid of the death, gift, and payroll taxes, and it would replace the current tax code with that consumption tax. 11 co-signers signed on to the bill, including Kamek, Duncan, Good, Representative Andrew Clyde, Republican Georgia and House Freedom Caucus Chairman Representative Scott Perry, and the Republicans of Pennsylvania. The bill illustrates the hard-line stance House Republicans are taking with the Biden administration and their policies expanding the federal government, including the new funding for 87,000 IRS positions. So let's talk about this. What is the consumption tax? Now, a consumption tax is a tax on what people spend rather than what people earn. This ensures that the tax code is neutral with respect to current and future consumption, and that the income is only taxed once. A consumption tax system would shift the time of collection from when money is earned to when money is spent. To minimize economic distortions, there is ideally only one standard rate that is levied on all final consumption, with as few exceptions as possible. Generally, consumption taxes are an economically efficient way of raising tax revenue. Compared to other tax revenue sources, consumption tax revenue as a share of gross domestic product tends to be relatively stable over time, even during economic downturns. Despite this, the downside of consumption taxes is that they are a regressive tax because lower income earners and households tend to spend more of their income than they save. So let's compare the income tax system versus consumption tax. Consumption taxes, in theory, would encourage saving and investment, whereas income tax discourages this behavior because it taxes both consumption and savings. Currently, the U.S. taxes individuals and businesses with income taxes such as the individual income tax, corporate income tax, and capital gains taxes. While the U.S. does levy consumption taxes in the form of sales taxes and excise taxes, it does not have a national consumption tax. In Europe, consumption taxes are levied as excise taxes and value-added taxes, or VAT. Every European country and more than 170 countries worldwide levy a VAT on purchases for consumption. Now, hardly a day goes by when some politician or editorial person doesn't suggest that we don't need the IRS, or should simply just do away with it. Most of them come in connection with suggestions for changing the tax system to something like the consumption tax discussed in this episode. What these people and McCarthy fail to understand, this is not challenging the sincerity of their views, is that without the IRS, our tax gap would entirely explode. We call our system a voluntary one, but we remain short of volunteers. There are simply too many people and businesses who don't get around to managing their day-to-day financials, filing tax returns, depositing their taxes, paying with those returns, or even preparing accurate returns. This circumstance is not limited to income tax. It is also present for estate and gift taxes, employment taxes, and excise taxes. As annoying as an IRS audit can be, and as unpleasant as some IRS employees can be to deal with, the reality, it is not an honor system which enforces itself. Those who clamor for an alternative system forget that some agency is going to need to be there to police it, whether it is the IRS or not. Sometimes we hear the suggestion that state agencies can handle a national retail sales tax. Most of them are undermanned and underfunded as they presently exist. And several states have no sales tax in place, to which the federal tax could be surgically even attached to. Those of us in the tax profession who deal with the IRS frankly prefer dealing with the IRS personnel and administrative system in place over what we encounter in the state offices. We all know that as long as we have a federal tax system, we're going to have to deal with the Internal Revenue Service or some equivalent. As they say, a rose by any other name would smell just as sweet. So changing the name of the IRS to something else will not remove the tax man. No matter what we call him, Uncle Sam's job will never change. Meanwhile, calls for abolishing the IRS simply distract the attention that needs to be placed on making the IRS more effective, starting with adequately funding it and reviewing the taxpayer's Bill of Rights. Now, I personally think we need to have better systems in place to have a better understood and functioning revenue service, especially for business owners. I have clients who have been audited by grumpy, overworked, overstimulated, underappreciated auditors, and trust me, that is far from pleasant. As my grandpa would say, you don't throw something away and get a new one just because it's a little dirty or broken. You respect your things and you learn how to fix it. Nothing comes for free, and I am the first to say the IRS has cracks that need mending. Of course, lower taxes would be great, looser deadlines and more clear tax codes, etc., etc. Tax season isn't stress-free. It's not a stress-free time for anyone. And it would be nice if it wasn't this dark cloud hanging over my clients and even myself, and instead became this mutual partnership that works to educate, understand, and uplift taxpayers. But I really want to hear your thoughts on this. Are you yay or nay for abolishing the IRS? What are your opinions on the new Speaker of the House? Let me know in the comments below. And as always, don't forget to share your thoughts on today's Morning Minute in the comments below, and leave a rating and review if you are tuning in on a podcast platform. Or give this video a big thumbs up and subscribe on YouTube.